Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that little bit of a dump that we did have. Of course, I did mention that we were likely to pull back to around 25,500. We did get a pullback to that area, not once, but twice, and now we're just kind of sitting a little bit below our previous level before that little pop that we did have. However, although we have signs of weakness in the chart in this kind of toppy pattern that we have here, we are still making higher highs and higher lows. So overall, this is still a bullish structure, and you just can't be too bearish until, of course, we break a potential neckline here somewhere around 24,750. Until then, I'm just going to give a crypto cookie update here. We are on the 6 hour, and although we only have about an hour and a half left on this term here, this time frame, we can at least see where we are positioned here. And currently on the 6 hour, we do have our volatility pivot around 25,620. So as long as we're above that number, I'm still going to say that we have a chance to kind of have a little bit of a pop up here. And we're just hanging out with the wicks down below where we are getting a decent amount of sell pressure. Now, if we do lose 25,596, we're going to be put back into the bearish control zone on the 6 hour. And so that would suggest that we're probably going to try for those deeper lows and perhaps even lose this chart should we continue to press down because things are getting a little bit sketchy here. You can see that we had a little bit of center of mass over here, somewhere around 26,000, and now it's really down in this $25,500 area. You can see this huge wick over here. You can see this wick that got bought up. But the positive thing that we have going for us is that as long as we're above 25,750, we have both our hold line and our add momentum line there. So we are just recovering a little bit of momentum, and the neutral point of control isn't too far away at 25,949. Now that would put us back in this range that we had just lost after that kind of, pump and dump kind of fake out that we had the other day, that mean reversion. And perhaps if we do get above, let's just say 26,000, then I would be looking for potentially reaching that $26,500 area, maybe 26,400 if it fails. But anyway, some type of pump attempt should we get above 25,950 there. And should we get above 26,450, then perhaps we're going to be testing, as high as 27,000. And, should we exceed or engulf this candle here, then maybe we could even get into that $28,000 range. That could put us back in the bull market should we hold above 28,000, and some change. Of course, we could talk about that at the time. In the current orientation, we are just making lower highs and lower lows overall, at least on a closing candle basis. This wick is a hair lower than this wick over here, but on a candle closing basis, at least on the 6 hour, this candle closed much lower than these candles. So it is getting kind of weak there, and we do need to see some type of strength come back into the charts. So that's for your 6 hour. If we do jump over to the daily, then you can see that we also have a very slender pool here for the daily. And it's very similar to the 6 hour in that if we lose this 25,750 to $25,700 range, then likely we're going to retest some of those wick lows there on a daily basis, which is a little bit longer period of time, which could be around 25,500 again. And again, losing that, we have a historical range. And also the Bollinger Bands here are suggesting, something around 24,000 22,500. Yeah, you can see these wicks over here that might get tested next, as well as this kind of support area over here. So again, we do have a lot of support in this region should we dip down, and that could end up making some type of bullish divergence that we could just skyrocket off of, being pretty technically low on many of these indicators. But I just don't really trust this price action right now. Usually when we have a pretty serious drop like the one that we had here, I love taking that first bounce. That first mean reversion is always a very reliable thing. Okay, you can see it here, right? You can see it, even here, right? You can see that when we have a drop, usually we get some type of a spike. What I'm very leery about is the second one. So let's just say that we dropped here, we bounced up nicely, we dropped again. The second one was pretty weak, okay? We got this bounce right here. The second one, it led into something kind of catastrophic, even though we did get a nice bounce off of it. So that first bounce, I usually am willing to take the risk on, but the second bounce, I just want to see a little bit more strength than what I expect from the first bounce. And again, we might build some type of divergence should we dip lower, and that could be what market makers are looking for. They may want to take out this wick over here and just put the fear of God in people and then take it to the upside. So again, there's a lot of shenanigans that go on this side of a bounce after you've already had a mean reversion. It's just sometimes it just fails in the weakness of it. So what are we looking for that kind of sign of strength? Well, on a daily basis, we want to see us closing above 25,936. If we can get above that, not only will we have crossed the volatility pivot, which will give us a bias to the upside, but we're also going to have pulled ourselves out of the bearish control zone at 25,868. Until then, which we're very close to, but until then, we still have to contend with the fact that we are in the bearish control zone on the daily, and that means that bears do have control of this chart. So even though we're technically holding our current momentum in this kind of sideways downward diagonal, that's not very impressive or anything, okay? Just because we're above this general continuation on the MACD, that's not a very strong, indicator there. So what we really want to do is have some type of confluence with more indications like the stochastic, and so we really are going to be looking for that volatility pivot to be held outside of the bearish control zone. Now, in doing so, we will have set up a squeeze on the 6 hour, which could then lead into just kind of a half squeeze on the daily, which could take us up to that $26,400 area where we might get rejected by the Bollinger Band's midline on the daily there, or we could even, wick up into this neutral point of control. And, should something shocking happen, we could cross the alpha energy level at 27,000 and maybe even push for that $28,000 level. That's a lot to ask after we had just had a huge pump. Okay, so my thought process is that maybe we get a little pump like this one if we get any type of a pump, and then we get a little bit more of a reset, and then after a little bit more time, then perhaps we get a bigger move up depending on how market conditions are, or we get a little bit of a fake out. So again, we have to watch this region pretty closely. And one reason that I'm really sketchy right now is just because how the dollar is operating. And if we look at the dollar, let's see, we can go ahead and just zoom out here because it does operate on much bigger timescales, and you can see that the dollar had a falling wedge, which is a bullish structure forming. Now, I did point this out in the group discussion in the Discord, which the link to that is in the description of the video below. But essentially, you can see, more or less, we have this type of, bullish structure here where we did get a breakout of this, and we are, pretty much at that measured move. So we could have another pullback or something, and maybe that could give us a little pop on Bitcoin. But I would expect over time for this to have more continuation. And it's not just because of this structure, okay? Overall, we can see that how the dollar has behaved off of these wedges typically has been a pretty strong run, more than the usual measured move. So, if this is just a classic falling wedge off of the dollar, then I would expect for it to retest its highs eventually. Now that doesn't have to happen, but again, whenever we have one of these first topping patterns on the dollar, and you can see we pushed up to a new level, we have a first topping pattern. Well, it was right here that we did it, and then we pulled back. We had some consolidation to pop out of a wedge, and then we, popped up to our previous highs, and then came back to our previous lows. So there could be a devastating push on the dollar, which could then make everything trading against the dollar, all of your favorite assets there, just much weaker in the charts. And eventually you can see that it does pull back, but then it gets another run which goes even higher. So we are going to be looking for this potential new bullish stage in the dollar, which could make everything pull back deeper than perhaps bulls are expecting. Now, it is interesting to see this 1, 2, 3 with a really serious higher high here. And then we also have this pattern over here in a little bit more of a diagonal orientation where 1, 2, 3, and the third one is a higher high. Let's see if we go back even further here, we can see 1, 2, 3, and this one's the higher. And, this one, very similar, kind of poked here and then came up and made a higher high. So the principle is still the same. Usually the dollar likes to make a high, have a really strong pullback, and then make an even higher high. Okay, and so my expectation is that since we made a high on the dollar, that eventually it's going to want to make a higher high. Now, in terms of this structure right here, I could easily see us coming to about 107, 108 there. 107.50 is a good target just to take out some of this liquidity, then maybe having a pullback, and then maybe going on a deeper run. So could a pop up to 107 be what brings all of your favorite trading assets down in the charts? And then when it has that deeper pullback, kind of resetting to support over here, could that be where we get the next run? And then, could it all be over once the dollar just pushes back up and makes a higher high? Well, that would be very classic dollar to do to the market. So I am going to be highly aware of that. But this is just making me a little bit wary of the market, a little bit wary of fake outs. But, as it stands, you have my levels for the 6-hour and the daily, and so those are tradable numbers. I think if we look at the Bollinger Band structure here, we are getting quite tight on the daily. So let me just go ahead and click on my Bollinger Bands there, and you can see that if I put on the upper bounds and the lower bounds, that this thing is just really coming down, really coming up on the bottom. So we're having this very tight structure, and that does suggest that we could get a pop up or a pop down very soon. Okay, I mean, yes, we can go sideways in this kind of like tube formation, but you see that when it ended up pinching together, we did at least get a pop first, right? And so we are going to be looking for some type of pop to the downside or to the upside, even if we do enter some consolidation, right? Just like right here, the Bollinger Band's very tight, pop up, right? And then we went sideways for a while. And then if we go on the 6-hour, the 6-hour is basically confirming that. And we did the same thing over here, really fat structure on the Bollinger Bands, a huge pop up, and then just kind of forever sideways. Got even tighter on the Bollinger Bands, popped up really huge, and then of course we just got the shakeout and then sideways action where we're basically having the setup for the same thing. Now in each of these cases it brought us a level lower, so could this bring us a level lower? Potentially, but you should be on guard now that we're reaching these type of extremes in terms of volatility. You're going to be wanting to be highly aware of where those volatility pivots are, aka the number that you need to be above to have a bias, to the upside, or if you're below it, a bias to the downside. And again, on the 6-hour, we do have it in our favor, but on the daily, right? So the 6 hours down here and the daily's up here, it's overhead. So I would be looking, for some type of conservative positioning somewhere above 26,000. That would be the play to the upside. And then again, under 25,600, that would potentially be the play to the downside. And anything in between could just be chop from, here until whenever volatility, which is kind of random in nature, decides to just make its move. All right, guys, I think I'm going to end it there. That's our alpha for the day. Stay safe and happy trading.